Okay, let's get started, everyone. Hello, everyone. My name is Ajay Manglani. I have the privilege to be the Chicago booth, San Francisco Bay Area Alumni Club president of our community here. And today with me, I have an esteemed panel. We are going to talk about Portworx, which was recently acquired by Pure Storage. The good news is 3 of our alumni members were involved in the company from the get-go, building, operating, and exit, and we are super excited to talk about that. Before we begin, some housekeeping items. By now, we have all gotten used to working on the Zoom and the online video environments, but still, this is going to be an online format. You can always submit your questions in the Q&A, and until then, you are in the participant and mute mode. These are some of the guidelines of the Zoom. The format of the discussion will be as following. We'll quickly start with introduction, and then most of our time we are going to talk about Portworx, and at the end we will talk about Q&A. So please continue sending your questions throughout the discussion. All right, so with that said, I am delighted and honored to introduce you all to this esteemed panel. With us today, we have Jay Das, Sarvesh, and Patrick. These 3 members have been involved in their careers from very different aspects. Jay has this extensive experience and expertise in investment. He leads Sapphire Ventures. Jay has such an esteemed portfolio. He has over 10 companies which have been acquired, over 10 companies which have been public, and there are a number of companies that he's already in the board with. Sarvesh, on the other hand, has significantly large leadership experience in go-to-market strategies as a CMO of organizations. Sarvesh, I would like to call him as the company builder. He joins companies, he grows them, he scales them, and brings them up to the point where they are ready for the right next step. Similarly, Patrick has a significantly extensive background as a CFO. 3 of them, as Chicago Booth alumni, have contributed a lot to the industry. Patrick has had the leadership roles as the Chief Financial Officer and over 25 years of experience within the technology industry. I would not take more time introducing them because their bios and their achievements speak for themselves. With that said, I would like to move on to our next slide. So this is the topic we are here to talk today, Pure Storage and Portworx. With that said, for the first thing, I would like to hand over for the first couple of minutes to Patrick, who is going to talk about what's everyone's mind today is, what is Portworx? Patrick, would you share the slides, please?
Sure. But before I do that, I just thought I'd run through some high-level background of what Portworx is and what the company does, where it's from, and how long it's been around. So just a moment. Technology. So I joined the company a couple of years ago, but Portworx is a cloud-native storage software company. We sell subscription software, and it's specifically for storage management and data management. And it's what is cloud-native is the next question. So with some context, before I get to slides, let me give you some background. In the last 40 years, there's been really 4 major architectural changes in software, the way software is developed and delivered, and the way businesses run using that software. You know, the first major architectural change that happened 40 years ago in the 1980s was the move to client server, away from mainframes and mini computers to PCs and desktop computers. This changed the way software was developed, software was delivered, and the way businesses were operated. We all know in the 1990s, the next major shift was the internet protocol. With the internet protocol, the way businesses were run, certainly, but also the way software was developed and delivered changed dramatically, and companies around it. The third major shift in the last 40 years was virtualization. A lot of companies, a lot of people know the company named VMware. They certainly was the leader and certainly still is the leader in virtualization. Virtualization takes virtual machines, if you will, and allows virtual environments to be run on a single physical actual computer. The fourth major shift in architecture was the move to containerization in the last 10 years. Containerization, what is containerization? What is this thing Kubernetes? What is cloud native? So containerization, which really is this architectural shift that happened in the last 10 years, is breaking up of applications into microservices. You know, what used to be 20, 40 years ago, applications that were very monolithic, huge, and taking a very long time to build, been broken apart into hundreds, if not thousands, of micro applications that are orchestrated together across various data centers or cloud providers of Amazon or Azure or wherever, and to come together to deliver one single application. So this has basically changed the way, once again, software is developed, delivered, and the way businesses operate. This move to agility, this move to the cloud, which has really been enabled by containerization, has brought with it, companies, all companies become tech companies, whether they be Kroger or Ford or, CDW. All companies now, regardless of what tech industry they're in, they're technology companies in one way, shape, or form. Kubernetes is the leading orchestration platform for containers. It is the orchestration engine that brings all these microservices together when an application is written. One aspect of Kubernetes that's its probably weakest link is storage. It doesn't handle storage very well, and with that, like us and other sectors around Kubernetes, around containers that have grown up, we deliver cloud native data storage and storage management. So with that, I'll get to my slides. So I apologize that I'm going a little long. I tried to keep this within 5 minutes, but I'm not sure if I will be able to or not. But I touched already on how the container market has been exploding. Goldman Sachs on the left-hand side is projected containerization to be in the 3 billion plus instances of containers by 2021. This leads to, maybe I'll give you that. This leads to what is being forecasted. About 50% of organizations worldwide will use containers in production, shortly, if not already, and really a spend of $3.5 billion in container revenue by 2021. So you can see some of the players on the right-hand side. Folks know Amazon Web Services, the vast market leader in cloud, platform. OpenShift is a product that IBM acquired via their Red Hat acquisition, and others. There's security as a sector around containers and Kubernetes, and then storage as well. What's driving this, all these changes is, there's various things, drivers, business drivers. Some of these things leading to, our solution have been the need for, speed, data, and security. The speed imperative that's been recognized, the need for agility in building applications, quickly deploying them so that they can be consumed and drive business, has been paramount, and just getting faster and faster. That really has been the driver of Kubernetes to a large degree, is this speed imperative. The data explosion that we all have read about since the internet, really, of data becoming the new oil, if you will, the extremely important asset, but exploding in amounts. And lastly, security is a huge headache, security and compliance, but constant need to stay on top of security threats. So this no technology deck would be incomplete without a tech stack slide. So this is a slide, one of many we have, that shows the new tech stack with Kubernetes for cloud native scheduling, storage and networking on top of a layer on the very bottom there, AWS, Amazon Web Services, Microsoft Azure, Google Cloud Services, or bare metal data center, what's called the private cloud, or the use of various platforms, often called the hybrid cloud or multi-cloud. Portworx solution includes various products, including our storage platform, migration across clouds, security elements, disaster recovery, DR, backup solution, and autopilot for managing, scheduling, etc. Portworx advantages is that it runs on any Kubernetes platform, on any cloud native or data center platform, and enables Kubernetes to work as agilely as it's meant to be, being cloud native. Customers include Comcast, T-Mobile, and all the names here, as well as hundreds more. Partners include IBM, Red Hat, and others. And I think I've gone way over my 5 minutes, but some of our partners include IBM. They resell for us, a huge advocate of ours. This was an important relationship and still is. But prior to the acquisition by Pure Storage, it was an extremely important growth driver for us, but also the organic growth driver as well. So some of the storage services, that we support on top of Kubernetes include these various databases and many more. With that, I'll take a step back since I've gone way deep into the details and just turn it back over to Ajay and others. I want to give you a quick snapshot of who we are. The company's been around for about 6 years, been selling for about 4 years, and just within the last 2 months was acquired by Pure Storage. So with that, I'll turn it back over to Ajay.
Thank you so much, Patrick. I learned a lot. This was definitely a great overview. So when we are doing this thing, let me turn over to Jay here. So Jay, this was a great company. I want to understand from you 2 things. When did you find out about them? And how was it like? And what was like your first thought when you heard about whatever the story was?
So yeah, by the way, thanks for having me. It's a great pleasure to be on this panel with Patrick and Sarvesh, and thanks Ajay for emceeing this. So I was just looking back at my email history. The first time actually one of my colleagues, Anders, met Murli was in I think September of 2015, and I didn't meet Murli till about I think January of 2016, right? And they had just done their Series A. And we got to know the team over the next I think 6, 7, 8 months as they were kind of progressing, and then we ended up actually leading and making the investment, which closed in December of 2016, right? Almost like a year to get to know the team and the folks there. And it's, the Portworx investment was definitely a little bit unusual for us because we typically invest in a little bit later stage companies with revenues, ARR, typically at least 10 million in ARR or more. And when we invested in Portworx, it was actually pre-revenue. They hadn't started selling yet, and they're still developing the product. But I think the reason why we invested was that we as a firm fell in love with the team, with and what they were developing, right? With Gu and Vinod, and with Murli as kind of the leader of the team, and Eric Hahn was there at that time, and we kind of made a bet. It was unusual for us to go a little bit early stage, and we had done a bunch of stuff in storage. We actually were, one of the investors. I led the Series D of Nutanix, which is a competitor to Pure Storage to some extent. So, we thought that we understood, we understood the storage ecosystem and the data management ecosystem. And, we kind of saw this, we made a bet on Kubernetes, right? We were also, I think there was another technology called OpenStack before that where we had invested, but we had seen Kubernetes take on and containers get a lot of traction. And we thought that what Portworx was trying to solve on the data management for Kubernetes and containers was very unique and nobody else was doing it. But really the bet was on the team when we invested.
Yeah, thanks for that. That was going to be my next question, and you already answered that. In general, so this was a typical thing, Jay. Somebody comes to you, asks you for introduction. You're a very renowned VC. What is in general your investment thesis? How do you go about? Because I tell you, a lot of people on this call right now would be very much interested in understanding just more as much as the structure and framework, than also this journey.
It's what everybody says. It is all about the team, and it's all about the personal connection. I think, when you initially start out, when we started out as a firm, we are still a fairly young firm, about 10 years of history. And when I first started investing, you kind of go, you don't think about, okay, what is a long-term relationship? You try to look at the numbers, the financials, you look at the market. But what you learn as you invest more and you kind of do this for a while is ultimately, do you believe in the team and whether they're going to be able to, recruit and build a product that people want? And more importantly, do you really want to work with this team for a while, right? Because this is actually a relatively early exit. When we signed up, if this had kept going, we probably would have been engaged with the whole management team for like 10 years, right? With MuleSoft, right? That Sarvesh was also there. I was engaged with the team for like 7 or 8 years, right? So you kind of have to really, really kind of that is why it took us a year to kind of get to know the team before we invested. So that is kind of, like an overarching theme for most venture capitalists, and for us for sure. And then, we kind of looked at it also from when we invest, in enterprise software, there is, you know, unfortunately, it's not like you always find these revolutionary things. Most companies which makes money or make are kind of very successful are all evolutionary. Right? You look at the names that kind of will pop out of everybody's mouth right now. Snowflake, it's not new, right? It was not only the data warehouses has been around for the longest time, even cloud data warehouses has been around, right? Zoom is not new. There was, WebEx and Join Me and bunch of like 20 other companies before that, right? Datadog is not. So we always try to kind of understand that is there a problem in the enterprise space that this company is trying to solve? And with Portworx, it was definitely a little bit unusual because you were kind of betting on two things, right? Betting on that there's a new way to do storage, but also betting on that Kubernetes was going to take hold and containers would be the way that people build software. But most of the time, whenever we look at it, you typically you don't want to invest in companies that are creating categories because they are always the ones that take a lot of money and effort. If you get it right, it can be great. But I think, in the enterprise software investing space, it's a lot easier if you can find some team that has a much better mousetrap that goes and, does things much better than what the previous generation of companies did.
That is a lot of wisdom. Thank you, Jay, for sharing that one. So it's a collective thing. It was a great product, great timing, amazing team, and definitely a potential to grow that business model. I want to shift gear here. So I want to move to you, Sarvesh. So now you have been, like I said, a company builder and operating builder before with your earlier experiences. And you were not on the finding team, if I may understand that correctly. So when and how did you find out about this company? And what do you think for the first time? And why did you join them?
Thanks, Ajay, and thanks for inviting this group. It's fortuitous that three of us worked from the from Booth at around the same time, in fact, and
I think our paths must have crossed because
Jay and I probably had
99, 2000, right?
Yeah, we had classes together, and then Jay was also board member at MuleSoft where we worked together, and but Patrick and I had never met. But and anyways, thank you very much for organizing this. And anyways, so it's interesting to speak about this. So to your point, Ajay, at this stage of one's career, after a couple of decades of having worked in tech and so forth, one begins to make choices in terms of what kind of a professional are you? Where do you grow? What are the areas in which you can contribute the most? So for me, personally, for everybody, that there's a set formula, whatever it is that they believe their strengths are. To me, my strengths are in targeting enterprises for software to sell into. Large enterprises, Global 2000s, is a sweet spot for me. And based on kind of the couple of years of experience, I've had with other software companies that sold into enterprise, right? So while I was at MuleSoft, by the way, there's another acquisition prior to that with EdgeSpring, which was acquired by Salesforce, which is where you are, Ajay, right now. Earlier days, Agile was acquired by Oracle. So smaller companies getting acquired by much larger companies to enter a brand new space. And then post MuleSoft, I was at a company called CoreOS, which was one of the linchpins for creating Kubernetes in the way in which it is today. Although Google was the company that opened up Kubernetes for the world. CoreOS was essentially making Kubernetes be automated. So it was, and then they got acquired by Red Hat, which I was there at that time when the acquisition occurred too. So the way I was thinking about it is, this entire container trend, as Patrick mentioned, it's the next wave. Kubernetes is the winning orchestration strategy for containers. So I knew that I wanted to be somewhere in that area, right? Cloud native is the space I wanted to continue in. So this is going deeper and deeper into infrastructure. Started in the application layer with Agile, and then went to middleware, and then so the only place we can go from here is metal now, iron. So, but infrastructure is a good place to be, and it's a nascent space. If you just look at the trends that have happened before, VMware and others, there's an explosion that comes when a trend takes hold. One or two winners will emerge. So that's kind of the market thesis, the same kind of thesis that Jay went through when they invested in Portworx. For me, as an operator, not in the founding team, marketing generally comes in, to take it to scale in Series B, Series C. That's the area in which marketing investments occur. So a realization that that's the place, that's the timeline when I need to enter a good company. So the first thing I look for is product market fit. And by the way, just looking at parameters rather than looking at Portworx in specific, is there a product market fit? Is there a big need that the product is potentially able to address? The way you understand how it's addressing is whether it's hitting your sweet spot in terms of the market it's actually hitting. So is the company selling into the first few global 2000s? In my case, that's the place that I like to be. Are they selling into global 2000s? And even if they haven't sold many, are they selling beyond only to other technology companies? There are many tech companies that sell to other tech companies. That's not a bad thing. But unless you start selling to the Macy's and McDonald's and the outside of tech, it's not a global 2000 play in my view. So are they selling? What's the traction look like, and what are they saying? Is it kind of a make or break in terms of their next transformation journeys? That's the second thing I look for. And the third thing I look for, it's usually cliched that you're looking for good people. But the way I look at good people is the motivation not only in the leadership team, but is a motivation within the company. Because I'm entering in Series B, Series C, there are enough employees there. Is the motivation intrinsic, or is it somehow there is a stick or a particular carrot, or is it intrinsic? Are people motivated to make this happen, and are willing to kind of roll up their sleeves and are enjoying doing so? So if you see those three parameters, with check boxes, with a positive checkbox, then that kind of a company is potentially one with which we can win. Even with those three, there's a lot of work to be done. You may not have the kind of opportunity afterwards, but without those three basic things, to me, it's not a good start. But once you enter, then it's all about operating and making it work. And with Portworx, it was particularly so. I'd created a list of companies that might be interesting. Portworx was in my list, and incidentally, we started having some connections and discussions, and it worked out. And so, and the thesis has held true amongst all those three things. We continue to land kind of very interesting large customers for business use cases that make a lot of sense for those companies.
Very helpful. Sarvesh, if you don't mind just going a little bit more into details, because a lot of people on the call might get benefit from this one. So yeah, you decide a short list of companies. Sure, you have connection as Booth alum. We don't have shortage of connections on the LinkedIn or other places. But what is your general approach that you follow in terms of starting those discussions? And what are some of the do's and don'ts that you want to recommend to people here right now?
In terms of the search process or the discussion process with our discovery process with the companies? Just want to be a little specific.
I would say search process. So you can land that particular role as a CMO, say, of Portworx. How did you go about from point one to point end, where they thought you were a right fit? You thought, anyways, you're going to be a great fit here as well.
Right. So, from And there are many opportunities for both alums and people in tech, in particular. Once you have a lay of the land and you've started working with certain groups of people, right? There's a lot of opportunities that come by your way. The thing that I want to specify in terms of search was when I was making the first moves back into software, I'd taken a couple of years off into equipment and instruments in the clean air space and so forth. But when you're coming back to software, it really is about be very clear about what it is you're good at, and use the interactions and relationships to specify that that's kind of what your interest specifically is. If you're very broad in terms of things you might potentially do, then there's nobody on the other side. They don't have a way to kind of connect to you in terms of, okay, here is a particular opportunity. If they have a particular opportunity or a thought process, and you're very broad to them, it doesn't make a connection. But if you're very specific, and if that's the right thing that they have on the other side, they make the introduction appropriately. So when I got into EdgeSpring, post the equipment company, it was, I'd worked with folks at Agile who were then they were able to introduce me to, at that point it was a VC at Kleiner Perkins. We sat down with, the partner there, and he specifically went through, his list of companies that he's in. Of course, it was a very warm introduction. So he's already interested in introducing me to some of his portfolio companies, right? And he went through a list of 4 or 5 companies amongst a list of 30 or something that he had in his investment portfolio at that point in time. He assessed these are the 5 that may be correct for you for a discussion perspective. And by the way, understand, VCs are constantly looking for great candidates to place in their investment, in their portfolio companies. It's not easy to get great candidates. It's very, very hard. And VCs are particular, and so are executive teams. But if you're a good candidate and you worked very well in the past with other people, those introductions are actually pretty strong. So he went through a list of 3 or 4 companies with me, and we narrowed it down to two from a recommendation perspective. I won't name the other company; it's still around. Good company, not right for me. But when I specified, enterprise software, having won a few large companies, this parameters I've been using for the last 8 years, and he knew exactly whom to introduce me to, and it was a single coffee after that, and it's almost like I think this is a match, and then rest of it after that is a process, right? So EdgeSpring was my entry, and after that, we were trying to sell EdgeSpring the product to Salesforce. We were selling EdgeSpring the product to MuleSoft. I knew the folks from MuleSoft from 20 years, 15 years past. Head of marketing, head of industry marketing, sales, and so forth. And that's why I was able to take EdgeSpring there. And they were like, when are you going to join us? When are you going to join us? You seem to be in the right place at the right time. So it was more, at that point, matchmaking at MuleSoft. But post that, for CoreOS, I changed direction, went from middleware to a brand new space, cloud native. Of course, this is nitpicking at the details right now, right? But it is still enterprise software. But at this stage, my introductions were the head of engineering and the head of product management at that point. Both of them came from MuleSoft. And so once you are in a successful group of with people that you work, they tend to want you and they invite you to these discussions. And so and that was, I was not willing to, and I was not thinking about making a change, but when they invited me and I realized, oh my God, this is CoreOS we're talking about. It's a brand new space. Let's go take on this challenge. And then similarly, once you're in CoreOS and you came out of that, it's Kubernetes, the attraction for Portworx to be interested in a person who's done marketing for a cloud native company becomes attractive. And so they reached out and, they're already on my list. And so the conversation continues. So my search has been relatively simple from there on. And you get a lot of, inbound leads that come in all the time. And it's a matter of being very clear on your objectives for what it is that you want to do, and staying with it, and then it builds and nurtures from there on. But that's hopefully that helps. But it is not a general strategy for everyone, but for a few people at least, it could be a way to think about it. I don't know whether Patrick did something similar, but that was clearly my case.
Yeah, I think it's a great thing. That is phenomenal. I hope everybody will like the story. I'm going to stop sharing my screen so we can see the speakers very well. Let me move on to the next step here. So, Patrick, if you don't mind, I want to move on to you. So here you have one of the most renowned investors investing in this one. And then here you have a marketer applying his own marketing playbook on his career, joining and finding a company. Could you tell a little bit about when do you find out? Because again, I understand you were probably not on the initial founding team. So how do you get to know about this company? How does this marriage work between you and Portworx?
Sure, I was actually introduced to the CEO by Jay here. He was on the board of of Portworx, and he was getting in touch with people. He was also considering an investment in the company that I was currently at the time, and I had expressed interest in looking around next opportunities. So he had introduced me to a couple different companies, including in Portworx. I think my evaluation was very similar to Sarvesh's, and it certainly came with a good recommendation from Jay. So a lot of it has to do with connection. As Jay mentioned too, the team makes a huge difference, and how you connect with them is really important, because it could be a very long ride. It could be 7-10 years, and everyone works really hard, and you want to do that with people you like and all that. So and I looked at I had spent a long time in the security space, but this always in enterprise software since 2000 thereabouts. So this was only a step away from security, still in enterprise software, subscription software. So I was betting on both the horse, both the jockey, meaning the management team, as well as the horse, the end market, which we talked about in the beginning there about Kubernetes and containerization.
Great. So let's shift our gears. We have been talking about the early and mid stages now. Let's talk about when was this whole idea, and I have one question, I'll go to Sarvesh in a moment, but before that, Patrick, when does this whole discussion about the exit was actually started, and what were the thoughts about it? What kind of options you were evaluating? Could you walk us through?
Sure, and I'd love to bring Jay into the conversation more too, and get his perspective. But first, maybe I'll just say that there's an old saying: you should run a business like you're going to own it forever. And the cynic will say, otherwise you will be. But it really should be focusing on growing your business and building a business to last. So really, the way to run a business is to go IPO, or to never go IPO and just grow and towards profitable growth. But at the same time, it's wise to always keep all your alternatives and maximize optionality, right? So, and how do you maximize optionality is through talking with others in the market, in terms of partnerships, in terms of tie-ups, et cetera. To get to that point, though, you need to have something compelling that another party is interested in talking to you about. And I typically join companies at a later stage. Companies that are pre-revenue don't need a CFO. And even in the early, mid single digit millions, they don't typically need a CFO until you get to a certain scale. But to your question about when were the discussions around an exit or a possible sale, I think the company, we were talking with lots of partners on go-to-market, joint go-to-market, and we had a large agreement with several agreements with IBM, and they were starting to bear fruit. So we were talking with others on go-to-market, joint go-to-market, and Pure was one of several. So that was back in early 2000, before really before COVID hit. And keep in mind the company raised, Series C in early 2019. When COVID hit, it was a year later. We still had a year of cash in the bank, but you have to do the analysis and do the, we did the same thing that a lot of companies do. But does that, to answer your question,
Yeah, but
when we first start talking?
to be fair, Patrick and Sarvesh, the company was not looking to be sold, right? It was actually, I think they're looking for a partnership, and with a bunch of things, and then Pure at some point said that, hey, they want to make a strategic investment, and that kind of turned into, hey, we want to acquire you guys, right? Even to the last day, I was like, do you guys really want to sell? Because I'm always, the one who's willing to go long. That's one of the things you realize in this business, that especially in enterprise software, if you hold out long enough, you can get really good returns, and you can build large successful companies. But look, at some point, we always, as investors and board members, we don't run the company, right? We really depend upon the management team to tell us what they think they should be doing, and it is, you can debate that, look, as being part of a larger organization with a really large sales team, that they can accelerate their growth. Sarvesh, that's happened with Mule, right? That their sales just skyrocketed when they had Salesforce kind of bringing them into CIOs. And I think that's what's going to happen at Portworx and with Pure, right? So it was eventually a good outcome, but the risk was there that if you wanted to go alone, you would have to raise more money, for sure, more capital to fund the growth. There would be more dilution. There's always a chance of, things not working out. So overall, I think the management team decided that, they could build a bigger business as part of Pure than standalone. And that was, a reason we decided to take the acquisition offer.
Yeah, I'd echo that. And I'd also say, going into COVID in March 2020 here, we did what a lot of companies do. We cut costs and did scenario analysis and, tested the market in terms of, should we raise capital a year early? And, just looked around. Interestingly, we actually had tailwinds. We're not exactly Zoom in terms of massive tailwinds, but we had typically sold to CIO organizations in these digital transformation projects, which were important but not necessarily urgent. And the whole COVID's testing of the worldwide business continuity of enterprises, I put an urgency behind these digital transformation projects. So if any, actually the last 3 quarters we had post-COVID, the 2 quarters we had post-COVID were our best quarters ever, and we're going in with bigger pipe too to the next quarter. So it's really interesting. In the beginning of the discussions, it was really about, okay, so how can we go to market together with Pure? We had success elsewhere. We've got a compelling offering. Better together. Then there's like, well, would you consider investing in us? We're thinking about doing a next round early, and then there came discussions about acquisition. You never for sale, right? If you're ever selling something, adverse selection, right? We learned that in school. If you're ever selling something, there's a question, well, why are you selling, right? So the best thing to do is just grow your business, and we contain costs naturally with COVID, which was great. We had this this top line increase. So all of a sudden, our cash burn started to fall dramatically as well. So if anything, in the last months before the transaction occurred, we had more chance of, going it alone. And that gave us better leverage in negotiating as well, which is great.
Another thing I want to add there, Jay, I know you didn't ask that specific question, is the combination of Pure and Portworx, to Jay's point, is particularly good. Pure, you understand the pure infrastructure. When I say pure this time, it's an English word. Pure infrastructure companies, are getting abstracted away in terms of value prop, right? Pure infrastructure is just, what is it after all? People are looking for services. They don't care about what kind of a device a particular company sells. So given that, Pure is entirely, moving towards cloud, and they're thinking about cloud native, and their investment is, and Portworx is it's not an orthogonal acquisition for them. Portworx builds on top of what Pure is doing and wants to do. So in that particular direction setting, it's a very, very accretive combination for both companies. And and so it makes for our entire team from Portworx to be a part of this kind of new, and this team now, Portworx gets to set a lot of good direction within Pure as an entity now, and because of that combination. So that combination, the management team, to Jay's point, the management team did decide that, hey, we recommend that we go through with this acquisition to become an entity, and one of the main reasons for that is because it was Pure and not many other companies. We may have been less excited by. Just letting you know that too.
Great insights. Thank you for sharing, all of you. At this time, I'm seeing a lot of questions are coming in, so I'm going to shift gears to just taking everyone's questions. But I think, thank you for just giving the full perspective about start of the investment, company overview, investment, growth, as well as his exit. One of the questions related to this one exit is, it says there were already corporate venture investors like Cisco, NetApp, HPE who had invested in Pure. So from the investment perspective and as the management team, does that create some strategic challenges when you are evaluating like your strategic sale or acquisition to Pure kind of a company?
I think it does, right, to some extent. I think Murli and the Portworx management team did a great job navigating that quite well. But you always run the risk of a company who is an investor, and that happened, right? That basically started building a product that was competing with Portworx. And look, the thing, and in the Valley, people are pretty used to having corporate ventures as investors, and around the table. So you kind of do, make sure that you don't share all the critical information. You always have open session and a closed session, so it can be managed and it can be useful. If you really get that to work. Where when you corporate invests in a company, they really take it to market and do a lot of things. But I would say that is only like 20%, maybe 25% of the time, if that works. But on the other hand, look, capital is green and everybody's capital makes sense. So and our heritage as Sapphire, we also started out as being part of SAP. So I don't have any issues with companies taking corporate VCs, but there's a risk always.
Yeah, I would echo that. And I for a handful of years I was an investment banker, and the typical advice was, be sort of wary of strategic money, meaning VC money was generally the preferred avenue up to a certain stage, but it gets a lot more difficult to manage when you have strategic money in because of the things that Jay mentioned. But I think the company managed it well in terms of having open and closed sessions, as well as just navigating certain, when investors come in, the rights that they request and the terms that they provide, et cetera. Managing those things when they came in, as well as on the way out. So it's certainly not easy, but money is green. So it did upsize the last round in early 19 by a fair amount, several $1 million. So that's additional capital that helped the company grow dramatically, but it's tricky.
Thank you for that. Next question along the same lines. What happens now post-acquisition? How is the integration going? Are there any challenges? And most importantly, will there be, if you think, any business changes or technology changes, either companies or both the companies?
I can take that. From an integration perspective, it is obviously driving momentum for Pure in their overall story, without a doubt, right? Pure's revenues are significantly, many multiples that of Portworx. So it's not a Portworx right now is not a revenue contributor to the top line for Pure. But the idea is Pure is taking a services orientation, and Portworx offers kind of take to cloud and provide services. As when I say services, not professional services, I mean capabilities as services. So applications as services, data services, databases service, things of that nature. So strategically, it's the right combination. And for Pure, going to cloud native is very critical. And they were already making investments with storage orchestration and so forth. Now that those product lines are ultimately going to be merged and work together under the same kind of umbrella, the leadership team, the Portworx engineering team, and the Portworx selling teams continue to take the lead in the efforts on cloud native. And so, from an integration perspective, there are two companies that have significant or even a little bit of overlapping capabilities. Then what happens is the rationalization exercise. Here it is less a rationalization exercise and more of a, how do we grow each other's business together? So in a way, this integration is actually from a strategic, how do we operate together? It's pretty solid. Hey, one thing, Ajay, we don't want to miss out. Rajiv Dhar is on the call today, and Rajiv and I were on the New Venture Challenge in 1998 together on a billing platform that we were working on, in competition with companies like AT&T and stuff. We even went on all the way to the final round, and I know that Jay was one of the judges in New Venture Challenge, but I just wanted to acknowledge that Rajiv is on the call, and we've worked together on a project before. So anyways.
You should have started the company like Grubhub or Braintree. It would have been worth a lot.
Indeed. Well, glad to have you as well, Rajiv. Thanks, Sarvesh, for that mention. This has been great discussion. I want to take one last question that is outstanding from the audience. Then I have two more questions on my list that I want to see if we can get collected in this session. Do you think Portworx is to the Kubernetes, business to what you think Snowflake is to data warehousing? Is it a good analogy?
It's it's that analogy doesn't hold for too long. It's in the sense Snowflake certainly did to warehousing. It cloudified it, right? It just brought it to the cloud and brought a lot of the strong capabilities. And by the way, Snowflake went through years of modification of messaging and built a very good business out of it. In fact, drove 130x plus multiple on revenues by building kind of a solid cloud-based business. Portworx to Kubernetes is really, it's an enhancement. Without Portworx, Portworx-like capabilities, Portworx is a category creator. Kubernetes would only be that successful. You do need storage for containers, which is basically a persistent volume that moves across many, now on containers, is a requirement, without which the entire kind of Kubernetes experiment is going to be limited. Now, it's not just Portworx. You need similar capabilities in networking. You need capabilities in security, capabilities for monitoring. All these are requirements without which the entire space is not going to be able to grow. And so therefore, it's similar in the sense it's creating a cloud version of something, but at the same time, it is dissimilar in the sense it's a brand new category capabilities that Snowflake, although it was cloud, the category was well understood before.
Yeah, I would echo that. So I think Snowflake, to your point, Sarvesh, is cloudifying data warehouses. So data warehousing has been around for decades, and it's kind of a category of use cases, right? So as opposed to Portworx, which is an infrastructure layer, it's deeper on the stack, if you will. Storage management is disaster recovery, backup, things of those nature that it's horizontal across industries. I mean, their use cases for are also horizontal across their clients use cases. Actually, Jay, do you have some
Yeah,
thoughts?
no. So I was just saying, look, like data warehouse, Snowflake is really focused on a very specific use case, which is analytics, and sometimes now they can do, machine learning on it. But it's all about, like sucking in all the data into this big, like a vacuum cleaner into the data warehouse, and then doing things on the data itself. What Portworx provides is a completely flip kind of a metaphor, which is like, you're basically moving data around within your applications, and your applications are kind of trying to get data from one place to the other. And, and these containers running your services are there. And Portworx is a layer that is kind of coordinating where the data is and where it's going. So in some ways, Portworx would actually live under Snowflake, right? Snowflake is a layer, would sit layer above Portworx. And I don't know. I'm sure Portworx Snowflake uses something to do their data management on their containers, and if they don't, I don't know if they use Portworx, but they probably had some kind of technology that was very similar to what Portworx did to actually manipulate the data they're storing in their data warehouse.
Makes sense. In the interest of time, I would like to move on with the two last questions I have. So here we are, successful acquisition, a great reunion of a couple of members from the previous companies. What's next for each of you? I know probably Jay will continue to invest in dozens of companies like this, but I would love to hear from you, Jay, and as well as from Sarvesh and Patrick. Are you planning to stay with the company? If yes, what kind of impact and role would you envision? And if no, what's next?
Let's start with Jay.
No, look, my role is, once a company gets acquired or, goes public, is to figure out all the people that are there and see what they're doing next and kind of go and invest there, right? So I'll be just talking to both Patrick and Sarvesh to see what they're up to and when their handcuffs are gone, to go see what they're doing.
Thanks for being candid.
So I so typical as CFO, I will be moving on. I mean, the CEO, he's not here. He's not a GSP guy, or I'm sorry, booth guy. But he and I talked, and he was a big advocate of mine, and he's a great human being. There's a large reason why I joined the company, as I mentioned earlier, the people you work with and work for. He's staying with the company, and he was a big advocate of mine to stay. At the same time, as is typical, acquirers, public companies buying younger companies, look at the general, look at the CFO and the people around the CFO often as duplicative. So, which is fine with me. I mean, I will be moving on in some months ahead. It is a few months away, but that was the agreement when I joined, that they would, they've given me a transitional offer. They've asked me to be deep into the integration, which I'm helping with now, and thereafter I'll be moving on.
By the way, Patrick was phenomenal for us in terms of our control of our operations, right? We were, as a startup, you're trying to think about products and customers and just and so sometimes you just don't have any operational control, and you start, when this year we could not have navigated with COVID and having to plan for letting the cash work for another 2 years kind of stuff. It was phenomenal. So all the operational details that Patrick is bringing together right now is pretty critical for us. Now, I, on the other hand, have decided to continue with Pure for a period of time. I don't have, I don't have an end time set in my brain, right? So I haven't done, this is the first time I'm doing it. In my previous acquisition, Red Hat, I was there for, similar to Patrick, for 4 months to get integration, settle the team in to the right spot within the company, and and then moved on. I'm not a large company guy at all. Pure is not a very big company, but it's a much bigger company than the ones I've recently been in. And of course, Red Hat got acquired by IBM, which would have been even more difficult for me because it's such a big company. And then all the other previous acquisitions, I left within a month or two. I've been in 5 of these or whatever before. So with Pure, the reasoning for Pure's acquisition of Portworx and what it does for Portworx in the long run is kind of the same reasons why I am staying on. In the sense, we have a massive market opportunity. We get to define the direction from a strategy and marketing perspective, both selling into Pure accounts, which they have a lot of compared to where Portworx was. And this is a nascent market that's exploding right in front of our faces right now. So given that, the opportunity is great for not only from a personal career perspective, but also to make something happen as part of Pure. And the product overlap and the capability overlap was so minimal that now this team gets to actually help drive some of the direction for Pure. So that seemed like the right set of opportunities for me compared to my previous one. So yeah, I tend to, we'll see in the next year or so how things are progressing, but the first signals are very positive.
I'm patient.
Great to hear.
Say that again, Jay.
I said I'm patient.
Exactly.
Yeah, and since it's a love fest too, I thought I would say that this is, I've been CFO at 4 different companies, and the board and Jay being part of the board has been the most constructive board that I've enjoyed working with. And I've worked with lots of different kinds of boards, and this board is by far the best set of investors and best set of people I've worked with, most constructive, et cetera. And same with the management team. I mentioned that earlier. Sarvesh and all the management team have been outstanding. It's really everyone working in the same direction. That's why it's been such a joy to work at the company, and it'll be sad to move on. But I will.
Thanks.
Well, that is so good to hear. We got only a few minutes. So at this point, I would like to ask the last question. Any final thoughts or comments for our alumni, for anyone listening to this call, advice, suggestion, any word of wisdom that you would like to provide?
One thing that I learned in this, you had sent along some questions earlier, Ajay, and the last question I think you had was something about what's your takeaway? And I think the title of a book that our CEO actually put me onto is it's called You Don't Get What You Deserve, You Get What You Negotiate. So just going through the M&A process anyway. And negotiate means a lot of things, it means how you handle yourself, throughout, right? Not just, on a deal, but you get what you negotiate in life. And I think that's my biggest takeaway.
It's a good one. Thank you, Patrick. Jay?
Yeah, no, I think it was echoed here a little bit. Find a team, a place to work that you really like and enjoy, right? I think, it's not everything is going to be great every single day, but I think, finding a group of people, finding a company, finding a team that is collaborative, that is constructive, that has a similar goal and, and is kind of, enables everybody to be, successful, I think is very critical. And if you don't have that in your career or your current position, change it, because it is you don't realize how bad it is unless you leave that and find something else that is really working.
Thank you. Sarvesh?
The last thing I'd say is, similar to what Jay said for companies itself, I'd say, when you're in a company or, you've selected the right place and you're working somewhere, be very agile and be ready to make changes all the time. In a startup, the only thing we knew was, hey, you try something, and if it's working, do more of it. And if it's not working, don't have any pride of ownership and be willing to make very quick changes. So experiments within all aspects of the business, not just, engineers do a lot of, A/B testing and experiments, but in other areas like marketing and selling go-to-market programs and things like this, experiments sometimes don't happen as frequently because the systems don't allow it. But as a startup, that's something that you have to do and be willing to do so to win together as a team and do them all the time. Be ready to make changes.
Thank you so much. At this time, we are at time, but I want to sincerely thank all of you today. Patrick, Sarvesh, Jay, it was such an honor and such a fun topic to discuss. I'm going to start sharing my screen for just 30 more seconds. I want to remind everybody on the screen who is attending today that this thing was brought to you together by our alumni relations team as well as our alumni club here, which you see some people on the screen. Please participate. You don't have to be part of the formal board, but we are always looking for volunteers and enthusiastic people who can contribute and help the community. And at the end of the day, our goal is just to make meaningful connections and strive as a community together. So please stay in touch. We do a lot more activities. And one more time, Patrick, Jay, and Sarvesh, thank you for your time today.
Thank you so much for organizing it, guys.
Thanks for having us.
Thank you.
Bye. Bye.